I forgot to hit the record button on our session, but I'll send it to you when we're done. I'm sorry. So you said what was your thing you have to tell me?
Oh, you have to have a written agreement from your client?
Yeah, suitability statement. Very good. So Nico, that suitability statement is not required for an established customer.
Mm.
So what makes you an established customer?
You have to, I think what, 2 years?
You have to have funds with me for a year
Mm.
or have done 3 transactions.
Yeah.
One other test question about penny stocks. Usually we give you a statement quarterly,
Hmm.
but if you have a penny stock in your account,
Monthly.
then good job, good job, good job. All these recognition questions are certainly testable,
Yeah.
in terms of the test. And so the way to, get a lot of them is, memorize them and then do what we're doing, do lots of practice questions, right?
I have it right here. That's the results.
Yeah.
And the markets. It was a knowledge of capital markets and understanding products and their risk.
Well, remember that's important because that first section is only 12 questions.
Yeah. So
and this is 33, right? So that's where you get, that's why we want to get this up to snuff. I joke if we can get you to par on section 2 and 3, you're going to be in really good shape because then when people don't pass, they almost passed everything. Do you have the printout, Nico, of the actual the document that goes behind that?
This one, yeah. I mean, yeah, this one was.
Yeah, because they got, they have a content outline that tells you what's behind each of those sections.
Yeah. So
by the way, I just posted a tutoring session I did with the guy. We went through that document. So if you check out the playlist, I just posted literally 2 sessions with a guy where we just went through that document and went through each of those items.
Was it the one with Chris?
Yeah, that's exactly right. That's exactly right. Did you see that already?
Yeah, I watched that one.
Yeah.
Oh, yeah. So about that one, the one that you have the knowledge of capital markets, you started from section 3 and then went to 1.
Yeah, because we had to finish up 3 from the previous session.
Oh, okay.
So I'll probably try. I'll put that in the note. Yeah, but I wanted people to have the starting. I guess I could trim it. But the other one we did, and he still owes me the video from. I should have kept the video myself, but he kept it and he was going to send it to me. I got to get. So I actually have the section 2 as well with him.
It was big. It was big help working. It was actually big help working backwards.
Yeah.
Yeah.
Yeah. Okay. Yeah. So I'll put a note in the. Yeah, so, you're not losing your mind. It starts with 3.
Yeah. When I saw that, I was like, what? Yeah.
All right. So here we go on this one. This one's kind of got to be careful on the language again.
To receive a dividend, the owner's name must appear in the transfer agent's book by the. I'm gonna go before the X date. So DERP.
You're on the right track. So let's just see if you can.
And so the X date's not set by the board.
Yep.
So I'd say the owner's name must appear in the transfer agent's book by the record.
Excellent. I love when people were talking out loud so I can see you're thinking. The thinking there was perfect. Mm-hmm. So, I was worried that, could you close the loop? Because I've had people sometimes, Nico, where they say the answer and they drift off somewhere. So excellent. That was excellent. Good job. Past due dividends on cumulative preferred shares. So we have 2 types of preferred. We have cumulative preferred and we have a straight preferred.
And they can never be paid until past due on cumulative preferred. Like, let's say, or it must be A.
Yeah. So, remember we have the 2 versions of this, and the 2 versions are going to be accumulated on the company's books until paid. Exactly right.
Yeah, because it's in arrears.
They can never be paid until the no, that would be absolutely incorrect. So excellent. The stated coupon on a bond
is the current yield.
Gotcha. The current yield would be what it pays you, the coupon, by the current market price.
A
lot of different words. It's like learning a foreign language. So that's called the nominal yield, the fixed or stated rate of return, the coupon. All the yields. That's the one that does not change.
Because I've been stuck on those questions, or like when your basis is higher than your coupon, that is a.
That's right. That's called the teeter totter. And,
Yeah.
it's very, again, it's not as testable as it's going to be. Are you going for your 7 next?
Oh yeah, so I take the SIE and then I take the 7.
Okay. So yeah, then it gets a little more even, important, but yeah, you're correct. A flat line is a bond at par,
Mhm.
right? And the thing that we just said, this question is about the coupon, that doesn't change.
Mhm.
So that's our fulcrum of our teeter totter, right? And then what happens is interest rates go up or go down,
Yeah.
and that causes the bond to change from par to whatever it is. And the one that's most testable on the exam is a bond at a premium,
Mhm.
right? And your point about a bond at a premium would be a
Your
relationship that looks like this. Premium means more than par,
Yeah. Your coupon
right?
will
And
be
then
more than your basis.
that's right.
Yeah.
You're absolutely right. So in here, remember, there's more likely the bond's going to be called. So
Yeah.
that is the more common version of this.
And isn't it call risk is more beneficial to no call is it call protection is more beneficial to the issuer when
Well, the
interest
call provision is advantageous to the issuer
yeah
in a declining interest rate environment.
yeah
And then the call protection is what prevents them from making you give back the bond.
yeah
And that would be the time and the price. The time and the price. Income fund has a public offering price of 25. Your customer invests 10,730 at this. How many shares will the customer receive? I kind of like this one.
I'm going to say you have income as a public offering price your customer invest at this price how many should they receive I'm gonna so I would take
So what we're going to do is we're going to take our calculator,
yeah pulling that out
10,000s. By the way, I'm terrible at math, so I'm not being facetious.
no yeah
I'm going to stick with my calculator. So I'm going to take 10,730. Now, the trick on this question is they gave us the public offering price,
yeah
right? So I think what they're trying to do here is get us in the weeds on this is the NAV, what's the sales charge? Doesn't matter.
yeah
Because the NAV plus the sales charge equals the public offering price. So then
yeah
we divide by the public offering price of 25,
I just get
and hopefully we should come up with one of those answers.
yeah
Now, the good news too about math is there's no interpretation about what the answer is. You either
yeah
get it or you don't.
Yeah, which with a question like this, I like those are I always go to, okay, I have to divide.
Yeah. By the way, yes, I can't
Yeah,
imagine. The only time I would say you don't have to divide something, and if you can't remember what to divide first number or the second number, the only time that's not true that I can think of off the top of my head would be like if I give you a quarterly dividend and you'd have to
yeah.
multiply by
And that's
4.
most shares, lower price. Yeah, most
Yeah,
shares and lower price
that's
reverse.
exactly right. Exactly right.
So T bills. I said T bills are short term. Debt
That's correct.
issued.
They're considered the risk-free rate of return, right? Because you don't have interest rate risk and you don't have credit risk either. So,
Yeah.
these are the best money market instrument available to someone.
And then process of elimination would be between B and D.
Yeah. Which one do you want?
Um. Okay, so if they're up to a year,
Well, just think of what I would probably do here, Nico, is think about how the government finances themselves. Does our government need money like every week or do they need money every month?
week.
Yeah, right. Yeah. Yeah, our government is expensive. I don't think you're going to see that on the test. You're just
Yeah.
going to know they're short term.
No, good. I literally was like, I hope I get the hardest questions. Like because the way that I took it in perfect timing. I think I got it done within 44 minutes.
Oh man, well that might be too quick. You might want to slow down just a little bit. I
I
mean,
know. Well, yeah, I know. I noticed that, and then
yeah.
I went back and the one of them that tripped me up was you're married, you have your wife in a joint account, but you're the one that makes the suitability requirements, and then you go in the hospital and your wife tells your FA to move this money. Is it allowed? I changed my answer from yes to no, and if it's
Mhm.
a joint, then it's a yes if it's your spouse. Is what I
Yeah,
read.
well, there you go. Yeah. So, the types of registration, pretty important, right? How do we register the account? So ETFs, you definitely need to be able to contrast ETFs with mutual funds. ETFs offer several attractive advantages over mutual funds. All the following would be advantages that ETFs typically have over mutual funds, except. So you got to be real careful on this.
Yeah.
Very
advantage-
testable know that ETFs can be purchased on margin, whereas
Yeah.
open-end funds cannot because they're new issues. Right. So
And then-
that's A is an advantage. We're looking for something that's not an advantage. ETFs have lower operating costs than mutual funds. They do, right? Because they're not buying and selling securities typically.
So I would have to go with, because the so the ETFs, the way that they are priced are at the end of the.
Well, that's mutual funds. ETFs trade like a stock,
yeah,
supply and demand.
yeah.
Right. So I wouldn't worry too much that it's D, but I would definitely know A, B, and C.
Yeah.
Right. So
I
a
know
lot
that,
of times
like,
when you're taking these kind of questions, what you're, kind of want to make sure you're getting is not the negative information,
mhm,
but rather the positive information.
yeah,
Right. That's what you need to know about ETFs. And you're definitely going to have to contrast ETFs with an open-end mutual fund on your exam.
yeah.
So both of those are going to be pretty damn testable.
It's like they could be sold short, could be sold on margin.
That's right. You could sell them short because again, it's like a stock. Exactly
Yeah,
right.
passive management.
Now, people take exception with what I'm about to tell you, and even though they do, I still think I'm right. Of course, you're not surprised. But ETFs are more of a trading vehicle than a long-term investment, as
Mhm.
compared to an open-end mutual fund. And that's, Nico, where people take exception because they don't catch the last part I just said, as compared to an open-end mutual fund.
Yeah. Say par value for a bond is also known as. So I could take off C,
Like that process elimination. You're correct. You can take off C.
and then I could take off B.
Yep,
Um,
that's correct. You can take off B.
So I'm stuck with A and D, and then what I would say is the face value of mine would be redeemed for at maturity. I go with D.
You are correct. Love it. That was a good performance there.
Your customer purchased a general obligation bonds that issued by the state of New York. When is the investor required to deliver the funds to complete this transaction? So with general obligation bonds, I would go when the offering is completed.
Well, not when the offering is completed. If you're buying a bond in the secondary market, what is regular way settlement for corporates and municipal bonds?
2 days. C.
Yeah, that was a bad miss, my friend.
How they get you. That's how they get you, by throwing these.
Yeah, yep. That was a bad miss, my friend. So if this was a treasury or an option, it would have been B. But I agree with you. This is not, the phraseology was a little tough. But at the end of the day, it's not so much about delivering the funds, it's just about settlement.
So the key word would be secondary.
Yeah, that's right. Secondary trading, right? The Uniform Practice Code standardizes practices within the securities industry, right? We all agree this is how we're going to do it.
So a reason that a company based outside the U.S. states may encourage the creation of ADR is for their stock to, I would say, C.
Right on. You're definitely going to get ADRs. ADRs are high probability. I can't imagine any draw in which you're not going to get about ADRs. Remember, you have currency risk still, and it makes it easier for U.S. citizens to get exposure to the foreign security.
And the only risk would be exchange.
Well, I don't like the only risk because it's still a business. So,
well, yeah,
that's a big one on the test. But it's got all the risk of a stock, and then it's in a foreign market, so that's a compounding risk. But yes, you have currency risk.
Yeah. Investment company that features and manages portfolio securities is known as features and manage portfolio of securities known as the following. So I could take off D. Manage portfolios. I'm gonna go with C.
Well, C would have been passively managed.
Oh yeah.
Fixed portfolio, passively managed. The assets are professionally selected.
Face amount.
Yeah, this is just a fancy word for mutual fund.
Yeah.
That's just the fancy word for mutual fund.
Oh, managed investment company.
Yeah. So remember, we have the Investment Company Act of 1940. I wouldn't worry too much about that.
Yeah. Your customer is a resident outside resident of the state of New York. Which of the following debt issues would generate interest that would be taxable to your customer at the state level, but not federal? I'm gonna go with taxable at the state, but not federal. I'm gonna go with A.
Well, so let's just go through this slowly. Your customer is a resident of New York.
Mhm.
So reciprocity does not apply state to state,
Oh, yeah.
right? So New York State can and will tax you on a bond that's outside of the state. So it says, which of the following debt issues would generate interest that would be taxable to your customer at the state level, but not the federal level? So all muni bonds are federally tax exempt. So as you see here, we have a B, A, and B are both muni bonds, and both of those muni bonds are going to be federally tax exempt.
Yeah.
Now they're asking you which one of these is tax exempt on the federal level, but not the state level. So now they're saying on which of these bonds will you not be paying federal taxes? Because on C and D, you're going to be paying federal taxes. If you buy a corporate bond, you owe federal taxes. And if you buy a treasury bond, the federal government can and will tax you. So C and D are out. Now it's A or B, and they're saying that it's going to be the Bridgeport, Connecticut. Now, this one's a tough one. I don't like the question, Nico, but I do like the takeaway. The takeaway is to know on suitability, I need to recommend to you a muni bond from your state.
Yeah.
I say, Nico, if you buy a muni bond from some other state, your state is going to tax it. Right. So we need to buy you a bond from your state. What's the other one you could buy that New York couldn't tax you on? Not Connecticut, but there is another bond outside of New York that your customer who's a resident of New York could buy, and it would be exempt at the state level as well.
Mm-hmm.
Very testable. Territories of the United States government.
Yeah. Okay.
Puerto Rico, right? Puerto Rico. So I don't like the phraseology. It's a tough question, but I do like the takeaway on that.
Yeah. Exempt from the penny stock rules are all right. So if you're in a penny stock, it would be exempt from the penny stock.
So remember the penny stock rules we talked about, and you got it correct, was I have to give you a disclosure document that you understand you're buying a speculative low price security. And so they're asking, in which situation do I not have to give you the disclosure that you're buying a speculative low price security?
I would say the unsolicited.
What's that?
Unsolicited?
Yeah, right on, right? That's on you, right? So if you call DD Ameritrade and want to buy hemp ink, don't do it. Anybody listening to this video, don't buy hemp ink. But hemp ink is a penny stock, right? If you call TD Ameritrade, I think it's one of the few places that let you trade it. That's on you, right? They don't have to give you that disclosure document because they're not the one recommending it to you.
Mm-hmm.
So here's kind of a similar question that we had last time. So which of the following securities pays interest that is taxable at the federal level and tax-free at the state level? So I go back to like New York. So now they're asking me, what can New York not tax me on, or can my state not tax me on, but the US government can and will?
So we could take off D.
Yeah, you definitely know Ginnie Mae is fully taxable. So I love that. That's a good process of elimination indeed.
And then we could take off A because if it's issued in your home state.
I love it. I love the way you're proceeding. So you got a 50-50 now.
And then I would say I would go B.
Excellent. That was excellent. Excellent. By purchasing shares of the stock in a company, the investors can benefit from
the increase in price of shares. So I could take off C and D.
I love it. Love it.
And then the receipts increase in this company outstanding debt securities. Okay. I would go A.
Yeah, you're correct. Remember, debt has nothing to do with owning the stock.
Yeah.
Excellent.
So all the following are true of negotiable commercial paper. That's so a negotiable jumbo CD. No, that's not. That's not it. That's not a commercial paper. I go true. Negotiable.
Remember,
So
this is an accept
it
format.
is issued. It is issued by banks.
And bankers' acceptances are issued by bank, but not commercial paper.
Commercial papers are to
Corporations, it's corporations funding their daily operations,
yeah.
right? So it's not issued by banks.
Yeah.
Right? It's issued by, like Schwab. It's got a maximum 270 and it's money market. I don't think you're going to get this as much as bankers' acceptances, which are used to facilitate foreign trade. And that would have been the C. So if it's bankers' acceptance, C would be true, but not commercial paper. Not commercial paper, right?
Yeah. So regarding the corporate bankruptcy and liquidation process. Okay, so it would say I'd go with D.
You say debt securities are satisfied before. You are correct.
Your client is about to retire and wants to rearrange his portfolio in order to have a predictable income. Which of the following would not be a good investment vehicle? I would go with under AAA is bad investment grade.
No. All the way you could go from AAA, AA, single A, all the way to triple B is all investment grade.
Okay. Oh, so Standard & Poor's is the under triple.
Yeah.
B.
That's a Standard & Poor's rating.
Yeah. So I would go. I'd go with the. I'd go with mortgage bonds.
It's not the mortgage bonds, the adjustment bonds. I don't think you'll see this on your SIE. I think you might see it on your Series 7. Adjustment bonds only pay interest when and if earned. And so you may or may not, that the key word here is predictable, and adjustment bonds are not predictable because they adjust based on earnings. Again, low probability on your SIE, a higher probability on your Series 7. Well, there we go. Looks like we got a draw here. As we said, every draw can be kind of challenging here. So now that we got 2 questions in a row on this income or adjustment bond, that's what these are called, income or adjustment bonds.
So I would just go with either B or D.
Yeah, you're correct. It's a 50-50 and you're correct.
Yeah. And then I would say it's secured.
It's not actually, it's just their promise to pay. It's a type of debenture. Again, I doubt we got 2 in a row here that I think are very low probability on your SIE, much higher probability on your 7.
The market forces that typically drive the price of a bond rating in the secondary market would include all of them. I'd go interest rates.
Well, does interest rates drive the price of a bond? It certainly does. If interest rates go up, bond prices go down. Remember, this is an accept question.
Yeah. So read the full question. Yeah.
So I would use, but you've been pretty good at the process of elimination trick. Another one I like, Nico, is called one of these things is not like the other. I call it my Sesame Street trick. So one of these things is not like the other. A is about a bond. C is about a bond. D is about a bond.
Yeah. So B.
Yeah.
Yeah.
It's not my particularly favorite question, but it is what it is. I like this. We saw this earlier. I don't know if you remember me telling you what this was, because you picked it as a wrong answer earlier, and now it is the right answer. Don't you love the SIE?
Yeah. So a fixed portfolio. I picked UIT.
That's what you picked last time, and it was wrong. And I kind of hinted this time it's going to be what?
It's B.
It's going to be right.
Oh, it's going to be right this time?
Yeah, because remember we said a UIT has a fixed portfolio and passive management.
So what about closed end?
Closed end trade supply and demand, and the closed end fund is being managed. There's a guy who's buying and selling the securities. So,
Yeah.
so yeah, that low probability, but people do tell me they see that every once in a while. But this is huge. Your point, it is huge to be able to contrast open end versus closed end on your SIE. Open end continually offering new shares to the public, closed end supply and demand. Right.
Yeah.
So
someone who purchases shares of a corporation's common stock has, I would say, limited liability and voting rights.
right on. Good job.
And which of the following engages in continuous public offerings? So public offering, IPOs, corporations. C.
Well, no, but remember they only do that once and then they're public.
Yeah, true. So mutual funds.
Yeah, you need to know that a mutual fund is continually offering new shares to the public. So that means not only they're going to have to comply with the Investment Company Act of 1940, they're also going to have to comply with the Prospectus Act of 33, right? So it's a mutual fund. Closed-end funds do a one-time IPO. Municipal bonds trade in the secondary market. Corporations do a one-time IPO. They can do follow-ons, but
Always have investment company security as defined. So I would go with it's defined as an investment company act.
this one's a tough one, man. This is tough.
I would go. I wouldn't say. I'd go with B.
I like that one. And what they're getting at is that that's a mutual fund with an insurance wrapper,
Yeah.
right? So the insurance, I would have done process elimination. The ETN, no. Grant, no. Hedge fund, no. So good job. I think that was pretty tough.
So which of the following securities would most likely have lowest expense ratio? I'd go with an ETF.
Yeah, excellent. Where you got to contrast the ETF with the mutual fund.
And which of the following projects would likely be funded with a revenue bond? So it's backed by I say sports stadium.
Yeah, user fees. Good job. Woohoo! All right. We ran over a little bit, and I didn't record in the beginning, but we ran over the coaching call. That's fine. No worries. We did 33 questions from the biggest part of your exam in terms of weighting. And then what I told you is coming is a complete practice fan. There's lots of them in my playlist. The SIE has 2 playlists on the YouTube channel. It has the lectures and then it has all the practice tests. So, and there's a new one coming shortly. So that should be of help as well. Anything else before we call it quits on this coaching call?
Yeah, I had a few questions based on just like the 2 sections, the 2 biggest sections. So one of them was with the understanding products and
excuse me.
So on section 2.
Yeah, let me just see if I can pull it up. I think I might be able to pull it up.
It's like I looking at this whole thing, it's like I know all the answers.
Okay, can you see my screen or see that screen with the content outline?
Yeah.
Okay.
So just looking over this, like when I read this through this explication of the outline,
Yeah.
you did, it's like it's easy aim and shoot. When I look over these, I'm like, okay, I know this because I know. So if you had like cumulative voting rights, it would say, we're voting between 5 members for 4 spots. So how many shares you own will be multiplied.
That's exactly right. We have 3 board seats. I got 100 shares. I got 300 votes. I can spend them any fashion I'd like. And that protects minority shareholders more because on any one thing I can load up.
And so for control and restrictions, control stock is owned by the insiders of a corporation.
That's right. Officers, directors, and principal stockholders.
So they can only sell 1% of the outstanding stock 4 weeks.
Yep.
And 90 days.
That's right.
And then
Right.
Rule 144A would be for foreign and domestic private securities for equibs.
Yeah, unregistered private securities. That's right. And they have to have the question too is they got to have 100 million.
100 million, yeah. And
Yep.
then credited would be 100 in 2 years, not including your house.
Or well, not 100, a million exclusive of your residence.
Oh, a million, 200, 300.
Yeah, 1, 2, 3.
Yeah, yeah. And then, so knowledge of the varying maturities, like, would that be a common question on the SIE?
No, but term maturity means they all come due at once. And serial maturity means they have different maturity dates in terms of the bonds.
Yeah. And then, so negotiated is the best price between um all the, yeah, so like negotiated versus the versus competitive is competitive also offers the best price.
That's right. Competitive means you go with whoever gives you the best price.
And then negotiated is the best.
Where the issuer selects the underwriter. We sit down and we negotiate together,
Hmm.
right? So
Yeah.
right now, Lamar is going out to the marketplace.
Hmm.
Now he was negotiating with the Ravens.
Yeah.
1-1. We're hoping we can work out a deal.
Yeah.
And then the Ravens said, well, I'll tell you what, why don't you go out there and see what's out there, my friend?
Yeah.
Right. So now it's competitive. Now we'll find out, Nico will find out whether the Ravens were smart or not so smart to do that. Right. So,
True.
by the way, same in a banking deal, right? That could be good or bad, just depends on what happens, right? In a
Yeah.
negotiated transaction, the advantage is you get more flexibility in working with the underwriter, right? Because I say, hey, we know each other, we do business together. So I don't think there's any read. Now, sometimes, I've joked with sometimes that doesn't work out because, look at, I'm an NBA fan, but look at Dame. I mean, Dame is a
Yeah.
loyal guy. I appreciate that, man. But if I were him, I'd say, listen, I got to go.
Yeah, he's out. Yeah. If I were him.
So and don't get me wrong, they pay him plenty of money, but so that competitive. I always think the mortgage example is a good one, right? If I go to my bank and I say I want a mortgage on a negotiated basis, that means I want a mortgage, and I say, listen, I expect you to do a good job and pass any savings on to me, and if you don't, then I'm going to not only not do this with you, I'm going to take every relationship I have at this bank somewhere else. Where if it's
Yeah.
competitive, I'm just straightforward saying, oh no, yours is the first person I'm checking with. I'm going to check with 5 more people and see who can give me the best deal.
Yeah, true. And so, and also one of the questions that I had was, one of the questions I was stuck on the first attempt was how the NAV was calculated in a closed versus an
Well,
open.
it's not relevant to that, except to know that the closed end fund is the only fund that could ever end up with a public offering price that's less than the NAV.
Mhm.
Right? Because if it's a no load fund, it'd be NAV plus 0 sales charge equals NAV.
Yeah.
If it's open end, it would be NAV plus sales charge equals public offering price. But because the closed end paid to trade supply and demand, the NAV could be higher than the public offering price.
Yeah.
And that means you would recognize that, oh, that's weird. That's got to be a closed end fund. By the way, it's embarrassing. It would be embarrassing if I'm the closed end fund manager and my fund's worth less with me around than with me not around managing the money, right? Trading at a discount. We would say the closed end fund is the only one that would trade, keyword trade, at a discount, another keyword. So trade at a discount. There's no other fund that would be trading at a discount. Open end funds would not, no load funds would not.
Yeah. And then, so American versus American, they settle anytime.
It can
Europeans
be exercised anytime.
exercise anytime. Europeans get exercise at the date of expiration.
Yeah. And so that means one of the worries you have when you're short an American style, somebody can stick it to you anytime.
Yeah.
It's a put contract, for example. Whereas if it's European, it's only going to happen at the end if it happens.
Yeah. And then I know, so it's sell stop to hedge a long position.
Yep.
And it's below current market price.
Yep.
Buy stop, hedge a short above.
Excellent. That's right. That's correct. That's absolutely
Buy limit is above sell. Sell is above, buy is below.
Yep. Slobs over bliss.
Yeah. And so 12B1 is considered to be a no load. your 12B1 fees.
Well, it
cannot
depends. You gotta be careful on that. It depends how much the 12B1 fee is.
Yeah, 0.25.
There you go. Excellent.
And then what I have is, yeah, so I have it right here, like closed-end funds, secondary market supply and
Yeah.
demand, open-end funds, continuously offer new shares, UITs, passively managed,
Yeah.
assets professionally
Yeah.
selected. So when I, on that question, when it said fixed portfolio, I instantly could take off closed and opens because it
Yeah,
always
that's exactly right.
based on
Exactly right. And
based-
remember, that's what practice, drilling, and rehearsing is all about.
yeah.
You know, I'm pleased with your performance this evening, and that's why you got to keep practice, drilling, and rehearsing practice questions, right?
Mhm.
Not all
Yeah.
of them are, you know, like we did. We had some real good ones. We had some that are, you know, but that's why you got to do lots of them to kind of get a good feel for it.
Yeah, what I found myself doing is getting so used to the practice questions that I was doing over and over with the one form, like with the STC.
Yeah, that's dangerous. Yeah.
Yeah, so that's what really stumped me because
Yeah, you gotta avoid it. It's tough. I mean, you know, but you want to try not to memorize the question. Just go, oh, I remember it's A, because it's actually the concept. Now that less true on the SIE than others, but it's, you know, true that you really want to kind of intellectually own it more than that you can, you know, you've seen it for the third time and it's B, you
yeah.
know.
So with
Okay,
the
anything else?
yeah, the knowledge of breakpoints.
Definitely should know about a quantity discount. You should definitely know about letter of intent, 13 months. Can be backdated 90 days. You get the reduced sales charge up front. You can't be hurt if you don't fulfill it because they'll just back flag your account to look like it looked. You should know that investment clubs can't pull purchases for purposes of getting the breakpoints, so no breakpoints for investment clubs. You should definitely know a breakpoint is good, but breakpoint sales are bad,
Yeah.
right? Breakpoints, the quantity discount, breakpoint sales, and maximize commission. That's bad. And that's a target rich environment in general. Mutual funds is target rich on SIE. The mutual fund, open end, closed end, ETFs, that's a target rich area.
Hmm. Yeah, and then I just had I think I had it right here. It was so the 8.5% sales charge.
That's very testable, maximum sales charge in an open end fund.
Okay, okay, I'm gonna write that down. Write that down here. And I had one more on section 3, and it was right here, and it had something to do with, so when it says the like the concepts of measurement, yield, yield to maturity, yield to call, par discount, yield to maturity, premium, yield to call, and then so was there a lot of physical versus book entry?
No, but book entry are treasury securities and state GOs,
Mhm.
and everything else is not book entries. So book entry means there's no physical certificate. It means the US Treasury has you on the books. They'll send you the appropriate checks at the appropriate times.
And okay, and then so they're gonna ask a lot of UTMAs and UGMA questions.
Well, yeah, you
Uh,
definitely need to know Uniform Transfer Minors Act,
yeah, I
no
know that.
margin, one custodian, one minor per account.
Yeah,
You know, yeah, that's testable.
and then yeah, you got to pay it in full in cash. You can't.
Yeah,
And you
yeah, no margin. Yeah, very
had a
testable.
question that was like, which one that you can't sell on margin? And I thought it was UGMA, but it also was selling buying something you haven't paid in full yet.
Yeah, well, retirement plans are cash accounts, and the two basic accounts in the brokerage firm are cash accounts where we intend to pay in full,
Mhm.
and margin accounts where we intend to pay part of the purchase price, and we want the broker dealer to the balance. And so you can't use margin in retirement plans and
And then 529. So Coverdell 2000 max, 18 years old, used for anything up to college,
Yep.
any amount of school. 529 is no limit, any qualified expense in college.
Yeah, don't worry about it. You're correct. But remember, there's a gift tax you might incur if you go past 5 years on the front load of the 529. But yeah. Listen, my friend, I got to go. I got dinner. We've did an hour instead of your 30 minutes. So you got any one last thing here before I go join the family for dinner?
No, I'll let you go.
Okay. We'll see each other again because we got Tuesdays. Remember, we do the live stream. If you want to join us for the live stream afterwards, I don't know if you've done that yet, but that's free. And that's a video session that we do after the live stream.
Yeah, how do I get that? How do I find that?
You just go to deantenneytutoring.setmore.com. deantenneytutoring.setmore.com under classes, and that will come up. And that's assuming it's not booked. I cap it at 10. So if it's not showing, then that means it's capped, so. But let me know, send me an email, and if I'll manually enter you into it if it doesn't let you.
All right, thank you. And
okay. All right. Good job, my friend. I'm pleased with your performance. So I think you're doing a good job working hard. So I'm sure we're going to make that make your mark this time.
Yep, thank you. You have a great one.
All right. Bye-bye.